Good evening. Thank you for joining what is going to be a slightly different Stockopedia webinar this evening. We've got a lot to get through and half an hour to get through it, and hopefully there'll be lots of positive insights that you can take away into your investing by the end of this session. I'll just give it a couple more minutes, a couple more seconds to welcome people into the webinar session. If you found the chat box, it's on the right hand side of your screen. Get your questions in, and hopefully if we've got time at the end, I will try and come to as many of them as possible. Okay, so I will get going. So welcome to this, as I say, slightly new take on a Stockopedia webinar. We've got some lots of really interesting research to show you, a lot of research that we've done in-house here at Stockopedia, and some very clear insights which we hope you can take away into your investing. So the theme for this evening is smart money. And smart money is sort of a collective term that we use for directors' deals, fund manager ideas, analyst ideas, anyone who has access to slightly more information about a company than most private investors do. Now, a lot of the research out there suggests that we can take advantage of trends and signals in these sort of smart money principles. And we have proved that as well with our own research that we've done recently. So this evening, what we're going to do is we're going to run through some of those signals in both direct trading and also in big fund manager ideas. And I will then run through some case studies and current examples that you can think about for your own investing. I will try and get to as many of your questions as possible, so get them coming in. And I will also point you in the direction of where you can find all this research that we've put together in our Stockopedia Academy. So excuse a slight jumping around. I want to make sure you can see as much of the screen as possible. So I am just going to change my settings. And I'll also be jumping in and out of the presentation and into some slides for some screenshots from the site. I feel like that hasn't changed the screen. We'll carry on. So to start off with, what are directors dealing? This is the sort of first half of our presentation. We'll be looking at directors dealing. So starting off with some key definitions in direct trading, and also secondly moving on to which direct trades can be the most positive signals for investors to follow. And these are the signals that we found in some of our research as well. So starting off with those key definitions. First up, company insiders, which means both executive and non-executive directors, have to disclose any buy or sell transactions they make to the market. And we show those disclosures via the Directors Deals tab on the StockReport, as you can see here. And they're also disclosed via the RNS. Now, one thing to note is that director dealing isn't always as simple as just buy or sell. I'm just going to quickly run through another couple of types of director deal that's useful to know about. So one of those is the exercise of share options or warrants, which are often considered as part of a company's remuneration policy or bonus scheme. Now, members of staff, so that obviously includes company directors, can be given share options or warrants, which gives them the right to buy a company's shares at a predetermined price. And these options are normally granted over a fixed period of time, which is known as the vesting period. And when the time period elapses or the director chooses to exercise their options, this is disclosed as an exercise. Now, this differs from a plain old buy transaction because directors haven't actually used any of their own money to pay for the shares. But share options shouldn't be taken for granted. So although they don't provide a signal for private investors looking to follow directed trades, options can be quite a helpful part of the remuneration policy at companies because it keeps directed trade direct rewards aligned with the success of the company's share price. So another relatively common directed transaction code is the take-up of rights. So rights issues are used when a company wants to raise capital, often quite quickly from existing shareholders. And the rights are offered at a discount, and shareholders can take up those rights, or they can sell them at the same discount, or they can just ignore it and do nothing. So again, the take-up of rights isn't it can't be used as a signal for private investors looking to follow directed transactions. There's no signal that comes from directors taking up their rights. But they can be useful because if the company is raising money via a rights issue and the invested directors don't take up their rights, it's not a very good demonstration of faith in the company. So now on to those signals which can be used to enhance your direct equity research. So the first thing to note is that signals from direct trading work best when they sit alongside other research, and it's because the returns that come purely from following direct trades can be quite lumpy, which obviously isn't great for private investors. But there are some very clear signals which we found in our research, and these are the three that we think are probably the strongest and most useful for you to follow. So the first one is that directed buying, plain and simple, is a strong signal for share price growth. So this chart shows the share price movement of companies after a director has purchased the shares. So in the green down here, you can see that this is a random selection of 200 companies and the share price movement after a directed buy transaction. And the share price peaks around 7% about 40 days after a directed trade. In the yellow, this is just the transactions that were made by senior management, chief executives or chief financial officers. And the upward momentum of the share price, it lasts for quite a bit longer. The peak doesn't end up being quite so high, but that positive momentum after the original share price purchase lasts for a bit longer. And then finally in the blue, these are the transactions where the company director has invested a material chunk of the total market cap. And now here the share price on average peaks around 16% higher, and that happens almost 100 days after the initial transaction. Now in this research, so this was the top 200 largest buys that we found, and at the bottom end of that, the percentage of the market cap was 0.04%. So it doesn't sound like an awful lot, but obviously when we're talking millions and sometimes billions of pounds in the market capitalization, that's what in this study counted as a significant chunk of the company's market capitalization. So there we go, lesson one. To follow direct trading, look for chief executive or chief financial officer share purchases, especially those which are large enough to be a meaningful portion of the company's market cap. Second useful insight that we found, which also complements broader research, is the fact that share prices tend to rise strongly after multiple purchases all around the same time. So this chart shows the average annual return for companies when 3 or more directors all purchase shares within 30 days. So one thing to note here, which is quite interesting, is that the average share price rise was actually higher with smaller directed deal transactions. So you can see here £10,000 plus. And that might speak to the fact that these smaller deals are more likely to be discretionary, so company management choosing to make an investment with their own money. So lesson number 2, look for companies where multiple directors are all buying at the same time. And finally, we found that private investors don't have to act on buying immediately, as share prices tend to drift upwards for some time after a share price purchase. So as you can see in this chart, on average, the share price tends to peak about 46 days after a director purchases shares. When it's chief executive or CFO, the peak comes after 78 days. And for those where the buy is a large percentage of the market cap, the peak actually comes after 96 days. So lesson 3 here, don't be fearful of missing out if you haven't bought after an initial share price spike, because the gains after a director buy can last for a while. So there you have it, the 3 takeaways from the research that we've done and the research which backs up research done externally. And at Stockopedia, we can show you how to put some of those ideas into practice. So I'm going to come on to that now. So the first example here that I'm going to show you is a case study, which is one of the clearest examples of the trends that come from director trades. This is on the beach. Obviously not all case study examples are going to be quite as clear as this one is, but it's worth showing because it's a really interesting example. So on the beach, sales package holidays. It was founded in 2004 by Simon Cooper, who is the star of this little case study. So you can see this is a share price chart from the start of 2020 to the sort of middle of 2023. The company was obviously swept up in the COVID-19 stock market sell-off, but also the shares were trending downwards for quite a while after they recovered after that big stock market sell-off. So it's a travel company, and the challenges for the travel industry were quite prolonged. So right down here at the nadir, the chief executive, he was the founder, he had actually already announced he was stepping down. He decided to purchase £2.5 million worth of shares at 88p. This share price chart just extends into 2024 and 2025, which shows really that middle of 2023 was the real low for the share price. Now I'm just going to come away from the presentation and open up the stock report for On the Beach, and I will show you how to find that transaction from Mr. Cooper. So zooming in a little bit. It was here, August 2023, Simon Cooper bought £2.5 million worth of shares. Now, obviously, hindsight is 2020 vision, but we can see that at the time, looking back, we can see that there was quite a strong rationale for Mr. Cooper buying his shares. So this is a snippet of the interim results, which came out about 3 months before that big share price transaction. The company was still in a loss-making position, but revenue was trending in the right direction. The total holidays, so total value of holidays booked via On the Beach, was also rising. And I'm also going to open up the stock report from the time of so this was pretty much the date of Simon Cooper's share price purchase. So stock rank, all very, very negative, but founder, chief executive, insights into the performance of the company, which obviously the market doesn't have. And Simon Cooper was probably pretty tempted by this PE ratio, 5.8 times forecast earnings, which was extremely good value for the company at the time, and bought his £2.5 million worth of shares. Now, if we go back to the main stock report, look over a 3-year time period, we can see that sort of August 2023 really was the bottom, and the share price has done extremely well since then. It's actually up 192%. So the £2.5 million that Simon Cooper invested back in August 23 is now worth almost £7 million. So looking back at the directed deals tab here, we can actually see that Simon Cooper has sold that holding, £6.8 million. Now, often when we see directors selling, it can be a bit of people can panic. Why, as a founder, he's actually not the chief executive anymore, he's a non-executive director. Why would the founder of the business be selling? Now, I think this is probably more a case of he's trying to get his level of investment in the company back to a more normal level. So the £2.5 million invested here took his holding up to 7.5%. And we can see he is, if we open the major shareholders tab, we can see that Simon Cooper is a major shareholder. He's one of the top 10 shareholders in the company. So selling the investment he made, which is now worth an awful lot more, was probably just getting back those levels back to a more normal level. So moving on, this is a case study that we're using quite a lot at the moment because it's a really good case study around momentum. So Rolls Royce was the best performing stock in the FTSE 100 in 2023. The share price rose 203% that year. So obviously when 2024 started, investors were a little bit concerned about the valuation. So I'm just going to go back and I will open up the Rolls Royce stock report here. This is the historic stock report. So this is from the first trading day of 2024. And the company had a PE ratio then of almost 24 times forecast earnings, which was really high for a company. Obviously, Rolls Royce is a big company. It's an engineering company. It's not a particularly fast growth company. But at the time, it had a stock rank of 83. And this was largely driven by the momentum rank. So our stock ranks are quite heavily weighted towards the momentum factor. And Rolls Royce momentum was 99, the rank at the start of 2024. Now, the momentum signals were very positive, and actually one of those positive momentum signals was actually directors' deals. So this chart shows, and excuse all the lines, I was just trying to capture quite how many director purchases happened throughout 2023. So this was a sort of systematic purchasing of Rolls Royce shares from both the chief executive and the chief financial officer. The chief executive was spending £31,000 and the chief financial officer was spending £12,000 every single month. Obviously, the share price was rising throughout that time. And this lasted throughout 2023 and into 2024. So between January 23 and May 24, chief executive of Rolls Royce had spent just over £500,000 on the company's shares. So that's one positive sign. Another positive sign at the start of 2024 was the fact that momentum was all heading in the right direction. So we can see here the forecast EPS growth at the company was 30%. And also the company was consistently beating earnings expectations. So we can scroll down to the consensus analyst forecast. Sorry, I scrolled too far. I've got too many tabs open. Get there in a minute. There we go. And we can see that at the start of 2024, the consensus forecasts were all trending upwards. So company was consistently beating expectations, and then the analysts were raising expectations. So that's a really positive sign of a company in growth mode, a company with strong momentum behind it. Now, these momentum signals obviously were very positive at the start of 2024, and actually it shows that a pretty prohibitive PE ratio didn't matter that much, because Rolls Royce was actually the best performing share in the FTSE 100 in 2024 as well, with a 91% share price rise. Now, as 2024 starts, a big question is, are these positive trends, 2025 starts, sorry, are the positive trends still in play? Now, one thing that has definitely changed is those cluster buys from the chief executive and chief financial officer have actually stopped. As I said, they stopped in May 2024. We can open up the directors' deals tab for Rolls Royce, and you can see here that this is the chief executive, this is the chief financial officer. That was the last director share purchase from those two then. These two who are consistently buying, they're non-executive directors, but you can see that their systematic share price purchases are quite a lot smaller than the ones that were being done by the chief executive and chief financial officer. Elsewhere, momentum all still continuing strong, still has a momentum rank of 99, F score very positive, and still consistently beating earnings expectations, and earnings forecasts are heading up. But as the value continues to get higher and higher, and the value rank goes down and down, and actually the quality rank lowering too, I'd say it's quite a brave investor who's investing in Rolls Royce at these prices at the start of 2025, but I probably would have said that at the start of 2024 as well. So the final case study for the directors' deals section of this session this evening is JD Sports. So this is a slightly different example, because this isn't a company which is enjoying particularly strong momentum at all. So this company has just issued its third profit warning. And we did some research into profit warnings a few years ago and found that profit warnings, the share price sell-off from profit warnings tends to last for quite some time after that first profit warning. The first profit warning was the start of 2024 at 119p, second warning in November last year at 97p, and the third last week at 86p. So share price continuing to go down. We also found that profit warnings tend to come in multiples. There is the old saying that profit warnings come in threes. Maybe that's been JD Sports 3 profit warnings. But overall momentum is not looking particularly good. But one thing that is a lot more positive at JD Sports is the fact that the chief executive has just bought £99,000 worth of shares. So that shows, that the chief executive of JD Sports believes in the potential turnaround of the company. Now, I can see why that's tempting. JD Sports is obviously a very high quality company, quality rank of 86. And it's now looking pretty decent value, especially on a forecast PE ratio, 6.4 times. The thing that I would hesitate, one of the reasons why I would hesitate to be leaping in at these levels, is that it's important not to try and catch a falling knife. So as the share price continues to trend down, as the earnings continue to trend down, and we can also see down here the earnings forecast trending down, it doesn't feel like a very good time to be leaping in, unlike what the chief executive has done. But I am impressed, and I like the fact that obviously that chief executives are buying, and that can create a signal. So I am going to leave myself a note. So add a new note: CEO bought 99k on 14th of January. And as we know that these trends can last for about up to 100 days, I'm just going to flag 29th of April, which is 100 days from now, which I did look up earlier. 100 days. And I will add that note. I'm also just going to set myself an alert for this company, because I want to see what happens in the next trading update. So check that box. And I also would like to see when the company's momentum score starts to pick up. So the momentum rank at the moment is 30. So I'd like to see it past 50 before I'm interested in it. So I'll save that, and I will be sent an alert when JD Sports momentum rank passes 50. So that's it for director buys. But how about director sells? So again, this is research that we have done, and this shows in the blue the share price change after director buys, and in the yellow the director sells. And it shows that there really isn't a signal at all that can be taken from director selling. Now, one of the reasons for this is likely because when directors sell, especially if they've got a big stake in the company, it's often to release liquidity, which can be a positive thing. So if share prices are rising after a director sell, that obviously interferes with the signal. It is, however, worth taking note of fund managers selling, especially when it's a less liquid company or there is a major forced seller on the shareholder registry. So this is something that we can assess via the major shareholdings tab in the StockReport. I've opened up Flowtech Fluid Powder for a reason, but we can open up the major shareholders here. Now, major shareholder selling was a particular problem with some of AIM's smaller companies last year, funds that were specializing in IHT or micro caps. They were suffering with quite big outflows, which forced redemptions. So that was the open-ended fund, or there were sometimes closed-ended funds which were forced into a managed wind down. And that was a situation which happened with one of Flowtech Fluid Powder's largest shareholders, Downing. And we can see that Downing is the last transaction was in December. They're selling down. They've still got just under 7% of the shares, but this is a fund that's winding down. So having a forced seller tends to act as an overhang onto the share price. You can see share price trending Flowtech Fluid Powder in the wrong direction. Same was true of National World. National World has now had a takeover offer. That was the share price jump here. But National World's fundamentals weren't actually that bad last year, but with the overhang of a forced seller, the share price was really, really held back. And also with Centaur Media, same problem, large companies, a large percentage of top-ranked shareholders, very liquid stock, big jerky trades here. We've also found another, this company, it's come out of another little bit of research that one of our data specialists here at Stockopedia has looked into. PureTech Health, share price all heading in the wrong direction here. major shareholders, we've got a lot of selling going on here from these major shareholders who own 58% of the shares in total. So not good to see major selling happening at a company like that. There are positive things to be taken from fund manager ideas as well. And the main thing to take away here is the fact that you want to be following the fund manager's best ideas. So a few rules to be followed. So the first one is to look for picks that make up a bigger weighting in the portfolio than they do in the benchmark. Fund managers looking to just match the benchmark will try and match the weighting of the individual shares with the weighting of the indices. So they're taking a bigger punt on companies where the weighting actually is higher than it is in the benchmark. And this was shown in a paper that was written in 2005. And it showed that following this strategy, fund managers outperformed the market by up to 23%. So the second thing to look for is the fact that newer picks, so fresher stock ideas, tend to outperform the ones that have been sitting in a portfolio for a while. And also looking for concentrated funds which make really big bets. So lots of funds own hundreds and hundreds of stocks, so they're effectively just tracking an index. And the funds that are highly focused, so they have 30 stocks or less, with high conviction picks, have a better chance of outperforming. This was something that was found in research that was written in 2006, which we've covered it all in our Smart Money guide, which has been updated today in the Academy. We'll send a link to it. So interestingly, one of the biggest examples here is Apple and Warren Buffett's growing position in Apple, which made Berkshire Hathaway, the fund that he owns, an awful lot of money. If we open the major shareholders tab, we can see that Berkshire Hathaway remains on the major shareholder register here. But Berkshire Hathaway has been a very high profile seller of late. At the end of September, it sold a quarter of its holding. If we return to the stock report, we can see, so this was around this sort of time. So a few gains missed out on. Their share price at Apple peaked at the end of 2024, but it's had a really rocky start to 2025, down badly in the year to date. So following that big high conviction idea that Warren Buffett created when he invested in Apple, which was slightly out of his comfort zone, he's not normally a tech investor, made Warren Buffett an awful lot of money. And it looks like potentially following his sell trades might be profitable as well. So there we have it. We are coming up to the half-hour mark, which I was aiming for. So I will now try and address some of the questions that have come through now. But if there are any more, get them coming in afterwards. We're also going to send out a survey for any other topics, any other sort of quick fire topics that any of you would like us to focus on in these webinars, because we want to make sure we can share as much of the information and showcase as much of the product, as much of Stockopedia as possible. Setting these up on screens, good question. Something that we would very much like to do, and at the moment it isn't possible. We are in the background working on a director's deals dashboard, so trying to showcase daily director's deals in our daily report is definitely something that we're going to try and bring in as soon as we can. And beyond that, screening for director's deals and screening for major shareholder movements is something that we will try and add to the screener. Two questions about the screener. Is there a way to flag when Harwood buy or sell anything? Again, it's an interesting point, like having a look for those big managers. That can be a good strategy. It can work. Obviously, we don't advocate for blindly following star managers, but when there is a fund with high conviction picks, it can really work quite well. So again, something that we will look at trying to roll into the product. And again, Ben Sharman, way to view director deals for the week. Yes, that is exactly what we're going to try and roll into our daily report. So little table showing daily daily director deals. Taylor Wimpey recent director deals. Let's have a look. I did see Barclay was quite an interesting one on the director deal front recently. Okay, so here's an example of these are the exercise of share options or warrants. Obviously, you can see that happened at 0p. Reinvesting of dividends, and Mr. Carney, he's been buying as well. So there's a fair amount of Taylor Wimpey, exercise of warrants and then reinvesting the dividends, which presumably are also coming from the holdings that companies that these big directors had. I actually have just remembered a really interesting statistic that I heard this morning. I mean, there's been a lot about Elon Musk in the news recently, but apparently being a Tesla shareholder, being an employee of Tesla and through your share options has made more millionaires than any company has ever done before. So share options can certainly be a really positive way of keeping not just executives but also employees aligned. How soon after a transaction can we see the director's dealings on Stockopedia? This is also a good question, and I'm going to see if anyone in my own little chat room has an answer to that, because I don't. So if someone, while I deal with another question, if someone who knows the answer to how long a delay, that would be great. So another one is about Serica, and I will, so director buying. So the question is really that Serica destroys my hypothesis on timing. So to have a look at the director buying. So it did only start taking place from February. So this sort of big series of director buying only started in February 2024. And the fact that presumably management is taking a multi-year view. So if we have a look at the share price movement, obviously Serica has not been a very good, not very high performing stock of late, but things have started to turn a corner. And potentially those directors who started buying in at the start of last year, not great timing, but probably taking a long-term view. So directors, how long it takes the director transactions? Within a day or two. Okay. Oh, there we go. Lawrence also answered it. Thank you, Lawrence. Is there a way to filter the director's dealings by value or person? So again, just having a look, the short answer really is no. But we can sort of use the two together, the director's deals and the major shareholders tab together. See if there's people who are appearing on both, and that's probably where you get the strongest signals. What about orchestrated small director buys to support the price? Is this a red flag? How can you tell the difference? It's a tricky one, and I suppose that's where it's important to combine the signals that come from director buying or selling with further research around the company. I think if lots of directors are buying in small chunks over a prolonged period of time, I can't see how that can be a negative thing. And as far as I know, there isn't any research just to suggest that it is. But if I suppose it's coming alongside a company where things are all looking pretty dodgy and potentially major shareholders selling out, then yes, that maybe is a bit more of a red flag. Cool. Well, we're on 35 minutes, which isn't too far over what I expected and hoped and aimed for. Just check whether there's anything else. Nothing that I can see. So thank you all very much for joining me this evening, and hopefully you found this really useful. And yeah, as I say, fill in the survey, let us know what kind of topics you'd like for us to cover in here, and head to the Academy where you can find all of this research and loads more. And we'll see you next time. Have a good evening.